Hello, today is Saturday, the 13th day of April 2013. I'm going to make this a very quick video, actually, although there's a lot of stuff to cover. And I'm going to start off within gold, which took a hammering on Friday, down about 4%. But I'm going to show the GLD first, which has the volume. Notice massive volume, to say the least. The next one will be silver volume, which is the same thing. SLV, it too had, well, I guess fairly large volume, barely beating out this SmackDown day, but the largest it ever had was 295 million, so that's like, what, 12% of the highest, the volume that I've been showing, which is the one that comes from Netdania. Here we have it here. I don't know where this is from. I know it's in millions. But the SmackDown that occurred was on lighter volume in comparison to what everything else said. So the images on the Dropbox folder got the monthly one for crude oil, the dollar index. Basically, within the dollar index, what I want to go over is that long term, I'm going to see how this 80 plays as resistance. But on the short term, the daily chart, geez, this totally resembles what a major decline in gold and silver and all the precious metals would look like. And I'm being sarcastic when I say that. Other charts on here, you have the Dow, I'm not going to go over that. Gold on the daily time frame. There we can see the large red candle coming from the 18 average of lows. When we switch up this to, let's say, the weekly term time frame, there's the special support level. Let's just draw a line in here. That level, which was support, is now a resistance level. It is, however, at this lower band that I've created. And I want to talk about this band as if it breaks below how dangerous it can be. That's on the silver hourly chart, though, when we look at that. Moving on to the monthly chart, as far as this, we can see that this level has looking like a breakdown, as they say. So what's the next support level? Was this line here. And that's in at 1427. That's only a 14.6% correction from the 252 lows at the start of this bull run up until here. So let's now move on to the yearly stats. The yearly, then, you know what, not many people show charts like this, but this really just goes to show you how the Federal Reserve has just destroyed, and the fiat currency system has just destroyed us. And, well, if we look at this with some stats within it, gold's up 71.6 times higher. So that's about that. I'm going to put a smaller line, though. Okay. And we're starting this from a little over 20. This is where this number is just a little over 20, 20.675. Silver's up 45 times, so 45 times 20 would be about somewhere in here. That's the rate of ascent for silver. The Dow Jones was 57 back then, up 257 times, somewhere like around there. The national debt is up 5,772 times since 1945. And since 1969, right here, it's up 45.6 times, which is basically the same amount that silver has been up. Just something to keep in mind, basically. Let's take a look at this on silver now. Also on this, we have the gold to silver ratio. I'm not going to cover that. Palladium, there's 3 charts. Not going to cover that. Platinum, not going to cover. The silver indicator that I've been going over, it's hit the -8 mark. And let's just use the 12 different moving averages. This is a key level. I think this is an area where I think you'd want to be buying. But the last time it hit either negative 0.8 or 0.8, it was negative actually, no, it was 0.8. So this would be a spot where you're like, okay, so you sold here, and now you're buying pretty much at the close because this happened in the last hour of the day. Okay, so let's move on to some of the shorter term charts. I talked about the lower band and what it means. The silver hourly chart will show that fine. Hit the lower band here, you have a small break, and then you have the larger moves. These red candles get larger and larger, and it's hitting the band all session through, as it was smacking down from about 27.5, breaking down below 26. Looking at this on some not as short-term charts, but still short-term, on the daily chart, there's the same sort of deal. There's a big red smackdown, down, of course, to this lower band again. Last time it's been there since there. So the next significant resistance level is set at, this is gold, actually. I want to go to silver. We've already seen that. Solo silver is pretty much the same. Let's go silver daily. For the most part, it's the same. Okay, resistance levels. Next one is here at around 2680. You got this 18 average of bands, which is where it laid off or came down from, and then the next significant Fibonacci level is at 2789. Basically 28 even. Let's take a look at this even more. Longer term, let's switch this from the daily to the weekly. Once I can find the weekly here we go. So again, we're back at the bottom of this range. Gold broke through support, whereas silver, well, literally it broke through, but by no means is it a clear breakout. And next key, the significant Fibonacci level here, which is the 23.6 at 30, which is a psychological number. And it really has to get above like 40 for me to say that this is in a superb bull market. The disconnect is pretty much coming into play now as well, as the sales for physical silver is actually picking up steam as the price is going lower. Something's got to give. The disconnect is pretty much in its early stages, it looks like. We'll see further if it is, but you need lower prices for disconnects to get even larger. Okay, let's go to the monthly chart for silver, and you can see clearly within this, you have 1, 2, 3 tests of this level. This is test number 4. Just maybe it's going to test this next significant level, which is in at 1895. Generally, the whole high teens, low 20s is that level, and that's, of course, where the disconnect would be. I would say to be that of massive. Let's move on to the yearly chart for silver. And again, you can see there's a small little line here. That's a 14.6% correction at 23.27. So there's another one that is in the high 20s. The next levels of support for that is the 18 average band. You also have this running average from this high, and then there's just so many different support levels that are in place, but it still has yet to break the 1980 highs. We already went over the gold yearly chart just to show you how much this is decimated. So you can say all you want about this run up was the Hunt Brothers, which is why it was such luck, we'll say, that it made 50 before. But when we see how much the stock market and everything is up, let's go back, in fact, to the gold yearly again for the second time. We got the stats on there as well. And again, stock market's up 257 times from this level here. And it's interesting is because silver was 57 cents and the Dow was $57. So if the Dow at like, what, 15,000, that's the same as the silver going up to 150. But the one point that I wanted to make that I haven't yet is that I did predict gold to have a yearly up gain, which it very easily should. I don't know if I should say should, but may. But this is also, it's down 11.5%. That's the most it's ever been down for the year since this bull market has begun, with the highest being back in here when it was down about 16%, 17% in 2008. But it still ended that year in a up mode. And not only that, but it hit its low in October of the year, but there's only a couple months left. We still have, obviously, we're a little over a quarter of the way through, so still under 3/4 of the time left to go within the year. But this has all been the down moves that we're seeing within the gold price, of course, doing this, and the silver price doing the same thing. It's all part of the paper digital manipulation game. As it all started right here at the QE to infinity tops. This is when the bear market pretty much last begun. And as one of the things that I've said within this chart here, you got like a chess game. The bulls go, then the bears, the bulls, the bears, the bulls, bears, bulls, bears. The bulls are going to have a turn soon, but when will it start and how big will it be? Then that will be the determination on that. So anyway, I got this under 10 minutes. The other charts that are within this, again, you can see them in here. The link to this is in the more information box, and this is dated 2013, April 12. Thank you for tuning in.